Hello there everyone again. This is the third video of a 3-video series where I demonstrate different versions of the leverage trader Bitmex trading bot. In this video I'll demonstrate the premium version of the leverage trader. The premium version includes all the features of the basic as well as the professional version, and I won't be discussing those features again in this video, and therefore I highly recommend to watch the previous two videos where I've discussed all the features of the basic and the professional version. And there are many new features in the premium version, and most importantly the zone orders, and I'll be discussing only about the new features. So I highly recommend you to first watch the previous two videos and then come back here again and then watch this video. So basically zone order uses the Bitmex bulk order management system, and Bitmex actually allows its API users to place many orders, up to 50 orders within one API call. With just one API call in a single instant, they can place up to 50 orders. And this is how actually the professional trader trades. They scale into a position and they scale out of a position. They never buy all at once or sell all at once. They usually buy in parts, and the reason for that is it helps in diversification of risk, and it balances the risk, and therefore it increases the risk is to reward, and it actually drastically reduces the risk, which is a very good thing when we are trading. And the zone orders also uses a quantity distribution algorithm to avoid certain problems and to also provide more features. So I'll be discussing about those features in detail in this video. Okay, so now let's get into the files. Now let's get into the bot. So you can see that there are three files. I've already discussed the basic and the professional version, and in this video I'll be discussing about the premium version. And now you can see that there are two files inside the premium version. The one is without Tradingview and one is with Tradingview. So in the first file, which is simply leverage trader, you have to create a strategy in Python. You have to create a strategy in Python, and then you need to use that strategy to trade. And in the other version, that is with Tradingview, you can deploy your strategy, you can create your strategy on Tradingview, and then you can create alerts on Tradingview, and then the bot will fetch alerts and then place orders accordingly. So I'll use the without Tradingview version first, and I'll open the update config GUI. That's the standard way of opening the configuration in any of the bot. Okay, and now you can see that it's a config file. So I'll copy all the configuration from the basic version first. I'll open the basic folder and I'll open the basic config. And I'll just paste it here, Okay, so I'll use the Hakenashi strategy here again, and I'll copy the API key. I'll copy the API secret, and I'll copy the number of contracts. I'll set the number of contracts to 1000 because we will be placing many orders in this case, and therefore it is important. So the more contracts they are, and they can be distributed easily. Okay, 25 contracts, you cannot divide 25 contracts into many orders. And then I'll set a leverage of 25. The time frame would be 1 minute and the candles 100. And here we have already discussed market order, simple limit order, tracing order, trailing order, and now we'll be discussing about zone orders. So you can see that there is a S because there are multiple orders. Okay, and now there are actually 6 parameters that you need to fill for zone orders. For limit order, for simple limit order, there was only one parameter, and for tracing order there were 2, but for zone orders there are 6 parameters, and it is a very complex order type, and therefore I have actually made a completely separate plan for this order. Okay, so the first thing is, what is the minimum spread? So we'll be filling it out later. First let's fill the rest of it. You want to use auxiliary order? Yes, and I'll set the take profit percentage as 10 and the stop loss percentage is 5, and let's get the Telegram tokens, and I'll copy this and I'll update this so it automatically closes. This is the basic version actually, and just delete these messages. These are the validations from the basic version, and I'll close this file. Okay. Now there are 6 parameters, and the first thing is enter the minimum spread from the top of the order book. So basically what happens here is that, let me just make the order book full size. Okay. Now what happens is that let's say if your strategy signaled a long, then what the bot will do in zone orders, that it will place many orders. For example, let's say the first order is placed at 7144.0, the second order is 7143.5, and so on. Now the minimum spread is that spread which you need from the top of the order book, and from that spread your orders will start. For example, if your minimum spread is, let's say, $1, then since the top of the order book is 7144, therefore your orders will start from 7143. So your first order will be at 7143, and then your next order will be at some other price. So basically your orders will start from here. If let's say your minimum spread is $10, then your orders will actually start from 7134, because that's the $10 difference. From 7144, $10 difference is 7134, and from here the orders will start, and there will be no order in this region from 7144 to 7134, and that's how the minimum spread works. So I'll first keep it $10 and enter the number of orders that you want to place. So at max you can place 50 orders at a time, but if you are trading with a very small contract size, for example, in this, since this is a demonstration, I'll be only trading with 1000 contracts. But let's say you are trading with 20,000 contracts or 50,000 contracts, then you can go for 50 orders. But 1000 contracts and 50 orders will not make sense, because if I'll divide 1000 by 50, it's gonna be 20, which is very, very small, and therefore I'll use just 20 orders. If I'll divide 1000 by 20, then it will be 50 order size, 50 contract size per order. Okay, so I'll take the maximum number of orders to be 20, but the maximum limit is 50. You can go till 50 if your contract size is actually very high, and enter the price range in which you want to place the orders. Now let's say if you want to place the order in a price range of $100, so from wherever your minimum spread starts, from wherever your the minimum spread ends, from there the orders will start getting placed between a range of $100. So if your minimum spread is, let's say, 0, then your orders will start getting placed from 7144. And let's say if your the price range, if this price range is, let's say $10, let's say the price range is $10, then there will be 20 orders placed between 7144.0 and 7134.0, now at a difference of 0.5. And if you will increase the spread, let's say if you'll make it $20, then accordingly at a difference of $1 till 7124.0, so from 7144.0 to 7124.0 your orders will be placed. Okay, so I'll make it simply $10. So basically there will be a difference of 0.5, and now there is enter the percentage deviation of distribution of quantity. Now what the leverage trader allows you to do that. So first of all, if you want all the orders to have same quantity, that is completely possible. So that will be 50 orders, that will be 50 contract size per order. If you're trading with 1000 contracts and you want to place 20 orders, but most of the traders don't trade this way. What they do is they want to provide different order quantities to different orders, and they want to do some different order styles. So basically there are 3 order styles. One is flat. Flat is basically your orders are randomly distributed, and the weight to the top of the order book is more or less equal to the weight which is away from the order book. But the other style is towards top. Now what towards top does is that more order quantity is concentrated towards the top of the order book, and less order quantity is concentrated away from the order book. And far top from top is actually opposite of towards top. So quantity is greater away from the order book and quantity is less close to the order book. So first of all, I'll just leave it 0, the percentage deviation for distribution of quantity, and then I'll enter the minimum order size to be 25. because if you might know that if your order size is less than 25, then Bitmex marks your account as a spam account. So the basic rule is that if your order size is less than 0.0025 XBT, then and if you're consistently trading with such contract size, then Bitmex can mark your account as a spam account. Okay, so this will be the setting that I'll be using for now, and let's start the bot. Now the trading bot, the validation is successful, and the reason why the bot didn't start is because I forgot to check the last checkbox, which say check this checkbox to start the trading bot, and therefore I'll again have to open the graphical user interface. So I forgot to check this box, and now I'll check this and again update the configuration, and this time the bot will start. I can see that there is a new terminal and the bot is putting up validating configuration, and I'll open the Bitmex exchange. Okay, and the reason is because I'm actually in the basic folder and I ran the basic bot, so I'll have to cancel it. I'll just cancel it, and I'll have to go to the premium folder, and let me run the premium bot and delete all these messages. This is the premium bot. I was actually in the wrong folder. I was in the folder of the basic bot because I copied the configuration from there, and now I'm in the right folder. And I think that yes, this is the right trading bot. Okay, I'll check this checkbox and everything is right. Everything is fine. I'll update the configuration. There is something wrong. Enter a valid positive integer. Okay, enter the price range. So we need to enter an integer. So I'll just enter 10. Okay. Now the bot is running, and let's check on Bitmex. So it should be a long order, and you can see there are so many orders placed, and all of them have the same order quantity, that is 50. And if you remember, our the minimum spread was $10. Okay, now the orders are cancelled, and there is because there was a short signal, and instantly if the signal changed, all the orders will be cancelled and new orders will be placed according to the signal. And again, actually this is a very sensitive strategy. So you can see it again turned red and again turned green. Sorry, it again turned red and there will be a short order. Okay, this is creating some problems because the strategy is way too sensitive. I think I should try it on testnet, or I should try it on different time frame, because it is continuously fluctuating. It is a very bad strategy and I do not recommend it using. I was just using in this demonstration because signals are pretty quick. So the basic idea is, since the minimum spread was 10 and therefore the first order is placed at a distance of $10 from the top of the order book, and then in the price range, our price range was $10. Our price range was $10, so you can see that in a range of $10 all these orders are placed, and all these orders have the exactly same order quantity. I'll show you. You can see all these orders have a contract size of 50, and there are a total of 20 orders because we mentioned in the configuration file that we want 20 orders, and there are 20 orders and all of these orders have the same order quantity. So now what I'll be doing is I'll be running it on a different time frame. I'll be running it on a 1 hour time frame, so the signal will be consistently green. Okay, and I'll first stop the trading bot. and then I'll close this trading bot I'll close this terminal, and then I'll again run the trading bot. Okay, so we have seen the case when the percentage deviation is zero. So when the percentage deviation is zero, all the orders have exactly same order quantity. But that is usually not recommended, and that's not how the professional traders trade. So what I'm gonna do is I'll increase this deviation. I'll make it 1, and I'll keep it flat for now, and then I'll again run it with a different distribution style. Okay, and now I'll run this trading bot, and again we are in 1 minute. I can make it 1 hour, and in 1 minute it is a green candle. So something is not right. Okay, so let's make the price range 20 this time, and update configuration. Now the trading bot is running, and okay, now you can see all the order quantities are different, and all of them are randomly distributed. So you can see the closest order to the top of the order book is this order, and it has an order quantity of 60, and then there is 51, there is 35, then again it increases, then again it decreases sometimes, and then it increases. So it is randomly distributed, and all these order quantities are different, and there are a total of 20 orders, and all these 20 orders sum up to be 1000 contracts. So you can see here is the sum: 1000 contracts, selling 1000 contracts, and this is the order value. Now there's a long signal, and again there will be a short signal. The strategy is too sensitive, and that's the whole idea of the percentage quantity deviation. Okay, and basically all these things are handled by the quantity distribution algorithm. It is a very advanced algorithm, and even if there are some limitations during the running of the trading bot during a long course, the quantity distribution algorithm would handle everything. Let's say if your order size came out to be, let's say for an example, if you're trading with 1000 contracts, and your stop loss got filled and now you have only 10 contracts left, and now there is a signal that close your short position. Now since there are only 10 contracts left, now these 10 contracts cannot be distributed into many orders, and there should be only one order to fill this contract size. Now the quantity distribution algorithm will automatically figure out that it only needs to place one single order, and therefore it is a very advanced algorithm which actually understands how the user wants to trade, and it understands all the functionalities, and it sometimes changes these parameters. So this maximum order size 20 is not a fixed limit. It can be 19, it can even be 1 if the contract size is way too less, and the quantity distribution algorithm will automatically figure out if 20 is possible. If 20 is not possible, then it will go for whatever is possible. And there is one more thing, that we said that the minimum order quantity should be 25. So I'll first stop the trading bot, and we also mentioned in the configuration that the minimum order size should not be less than 25. But if the total order size itself is less than 25, then the order will still be placed, and even though there will be only one order and that quantity will be less than 25, but that order will still be placed. And when the trading bot is running in a long duration, then there could be a lot of things which the trading bot has to handle. There could be some overload errors, and there could be some mishaps, and the quantity distribution algorithm takes care of everything, and it basically processes everything, and it does not let your bot stop function. It does not let your bot to get confused, and the bot functions very smoothly because of this advanced algorithm. Okay, and now what I'll do is I'll use different order style. First of all, close this, and I'll again run the graphical user interface. and this time I'll be using a 1 hour candle. So I'll use a 1 hour candle and I'll make this 10, and I'll make the distribution style as towards top. Now towards top means the the more bulkier orders, the orders which have more order size will be near to the order book, and the orders which have less order size will be away from the order book, and it will be completely opposite in from top. So currently it's towards top, and this is just a way to get into a position, and this is just a way to diversify your risk and have more control over your trading. And there is some problem. Let me make it 20. Okay, now the trading bot is putting up, and I'll switch to 1 hour, and you can see short orders. And now the closest short order is 7154.5. This is at the top, and then there are 7155.5 at a distance of $1 each, and you can see this has the maximum quantity, and the quantity is slowly decreasing. So most of the quantity lies at the to the near of the order book, to the near of the top of the order book, and less quantity lies away from the order book. Okay, 1 hour is also changing color, so I think next time I'll use 4 hours maybe. Okay, I'll use 3 hours. Okay, so now let's use the TradingView version and not the Python version. And for TradingView, I'll pass manual signals by using the volume thing. Okay, so first of all, I'll stop this trading bot, and there you go. The trading bot is stopped. All the positions are orders are cancelled, and now I'll stop this terminal too. And now I'll open. First of all, I'll open this config, and then I'll open the TradingView bot, and I'll open this config file. And I'll go close all these tabs. Okay, so this is the TradingView version, and this is the non-TradingView version of the zone orders. Okay. So I'll copy all the settings in the TradingView version, and I'll copy the secret key, and I'll copy the number of contracts. The leverage is 25, and both long and short, yes, 10, 5, and Telegram. So I'll copy this, and I'll copy this, and I'll make it zone orders, and I'll make it let me make it just 0, because now the orders will get filled, and I'll demonstrate how the auxiliary orders will work in the case of zone orders. And I'll place 20 orders because the contract size is just 1000. And what is the price range? So let's make the price range to be $20, and let's make the percentage quantity deviation to be 1, and I'll make this from towards top. So more orders, the bulkier orders will be at the top of the order book, and the smaller orders will be away from the order book. And the minimum order size, let's make it 25. Okay, and now first of all, let's just close this one, and I'm not checking that, so the bot will not start. It will just simply update and close, and there is an issue. I'll close this, and now I'll update this configuration. I'll check this checkbox so the trading bot automatically starts. And this is actually the TradingView bot, and I'm not using the key, so I'll only have to pass the duration flag. Okay, Now the bot will send me the webhook URL. Okay, so this is my webhook URL and I'm gonna use this URL from Tradingview to operate this bot. So I'll open Tradingview and let me just switch to normal candles. Okay, so first of all, I'll create an alert and I'll say if volume is greater than 1, and in that case I want to pass an alert, and the message should be /t, and let's take a long position. Okay, so you can take a long position, you can close a long position with CL, you can take a short position with S, and you can close a short position with CS. So if you're making more complex strategy, you'll need all these four parameters, and if you're making simple strategy, then only L and S might be enough, where you only want to take long and short, or maybe just L and CL if you only want to take long orders and then close those long orders, you never want to take short orders. So I'll go long and I'll create this alert. Okay, the alert got triggered. You can see that there are so many orders from the top of the order book because the minimum spread was 0 in this case, and since it was a long signal, all the orders are long, and you can see the more quantity is at the top of the order book. So 7144 has the highest quantity, and the quantity slowly decreases as the price decreases. So here we are offering 82 contracts, and here we are offering 66 contracts, and it is consistently decreasing. So we are offering more contracts at the top of the order book. And now you can also see this thing, how your orders are distributed, and you can see it is this range, and you will be buying this, and you'll be buying the XBT contract in this complete range. When the price will starts falling, this range will automatically starts getting filled. One by one the orders will get filled, and you will start to get into the position, and this is a very professional way to trade. And I highly recommend you to buy the premium version, because the zone orders can actually make a really great difference in your trading style and in your expected profit. Okay, so let's see how the orders get filled and how the auxiliary orders are placed. So auxiliary orders are also extremely real time in this situation, and as soon as the orders get filled, the auxiliary orders will start getting updated themselves. And let's say if only one order is filled, then only auxiliary order for only one order will be placed, and if more orders are filled, then accordingly more auxiliary orders will be placed, and the prices of the auxiliary order will be based on the average entry price. Okay, so the average entry price will also change as soon as more orders will start getting filled. So I think that the market is actually very still now, and it is very difficult for the orders to get filled. So I'll just wait till some of the orders get filled. Okay, so now you can see that one order of 82 contract size is filled, and instantly two auxiliary orders were placed of 82 contract size, and the market is actually very dull, and therefore I'll stop the trading bot now. And I hope you have understood. So you can see that the market is just not moving, it's just moving in a zero point 0.5 spread since a very long time. It's about it's literally about an hour now. It's more than 1 hour. The strategy, all it's doing is just 714 4.5 and 714 4.0. Okay, so I'll close the trading bot. I hope you have completely understood it, and if there is any other further confusion, please feel free to send an email at support@leveragetrader.com, support@leveragetrader.com, and the website is the link is actually here too. You can use this email to send all your queries, and you can also check FAQs. So this is an internet connection problem, I guess, but it's related to website. This is specifically related to my website. So I'll close it and I'll open it again. Incognito mode. Google is opening. Facebook is also opening. Okay. So there it is. And I'll close the trading bot. So to close the trading bot, I'll just stop. I'll use the stop command. You can see that still there are many orders, and a contract size of 82 contract sizes. An order of 82 contract sizes filled, and you can see these two short orders are actually, this one is the take profit and this one is the stop loss. And as soon as more orders will get filled, this will get cancelled and new orders, sorry, these two auxiliary orders will get cancelled and new orders will be placed according to the total open position. So currently the total open position is 82, and if the total current open position will update, then these two contract size will also update. Okay, and now I'll just stop the trading bot, and yes, I want to stop it. Now you can see that all the orders are cancelled. So this was all about the zones order, and there is one more feature that is included, and it is a super coupon. And basically you will get a discount coupon which will provide you up to 40% discount on your next order. Now obviously if you're buying the premium version, then more or less you already have the basic and the professional version, but there will be new bots that will be coming on this website on leveragetrader.com, and it will be related to Bybit and other exchanges, other margin exchanges and other future exchanges, and there will be a bot for Binance futures too, and you can get a discount of up to 40%. If you buy the premium version, you'll get a discount coupon, and it will be a one-time use discount coupon, and you don't need to use in these trading bots, but you can use it on the new trading bots that will be soon coming on to the website. Okay, and the reason why I am doing this is because the revenue that will be earned from these trading bots will actually be used to make more advanced trading bots, more advanced user interface, where you can do many things such as backtesting and a more intuitive user interface. And those trading bots will be more advanced trading bots, more fast and more low latent trading bots, and all of them will be sold completely open source. And this is undoubtedly that all of them would be sold completely open source. And if you buy the premium plan, then you will have a coupon that will give you a hefty discount. Okay, and there is one more thing that I would like to say, that you will get the swing strategy in the premium version too. Basically all of the things, all of the features are available in the premium version, and all of the basic features are also available in the premium version, and all of the basic features are available in the professional version too. Okay, and you can compare this trading bot with other trading bots in the same price range, and you will know that this one is much better, and there are so many features. And TradingView webhooks, I mean currently I've seen that only 3 commas use TradingView webhooks, and 3 commas is actually based on a subscription model, and it is a server hosted thing, so you have to give your API keys to another company, and I don't really like that concept. And again, the flexibility is very less. You just put your money, you just give your API keys, and it's more like then you let them trade according to them, and you let them make money. And this is not how trading works, and this is not how you can earn organically. And you need to have more control over your trading strategies. You need to have more control over your trading bots, and therefore leverage trader is a perfect option. And uh, and in this way I would like to conclude this video, and I hope you buy one of these three bots. And please let me know if you have any queries. Please send an email at support@leveragetrader.com, and you can check the FAQs, and if you're satisfied, then go ahead and buy now. Okay, thank you.